All right, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you about why I personally believe the greater financial markets, primarily the equity markets, will likely see a pullback as we head into the summer. Considering summer months tend to be pretty rough for equities, on top of all the macroeconomic fundamentals at play, primarily the Fed's words earlier this week, which we will cover an article on. I definitely want to give you guys some of my thoughts around that and how that impacts the macro financial markets, on top of just the fact that looking at all these charts, primarily the equity indices, primarily the S&P 500 and the NASDAQ just look overextended and look like they want to turn down. Just there's a whole bunch of reasons that many of you guys who have been tuning in over the past couple of months would know. I believe that the equity markets are overextended and it's about time for a correction. Okay, so I do want to talk to you guys about my price targets. Of course, as we get into the charts, as we move into the video, I will try to articulate and rationalize some of my fundamental arguments a little more. But that said, you guys, I know it's not fun being a bear. I know it's boring. I know it kind of sucks. I know it's definitely not as fun to look at and watch the videos, but that's just the reality of the market. Sometimes you adapt to the situation, and there's always ways that you can play pullbacks in the market, like what I'm doing in my portfolio personally right now. That's why we're going to cover the VIX as well. Ways you can hedge yourself against equity market pullbacks. So there are hedges. And there are also sectors within the market that can and hopefully will, that I'm playing right now, that I know many of us are interested in right now, can outperform the greater equity markets. Just because the S&P 500, the NASDAQ sees a pullback, that doesn't mean the entire market is. There's certain subsectors within the markets, again, like small cap EVs, green energy, that I'm really excited about right now personally, some biotechs that I'm keeping an eye on. So just keep in mind, you guys, there's always a bull market somewhere. You just got to know where to look. There's always a star. You just got to know where to look up to. But again, just because I'm bearish on the greater equity markets does not mean I'm bearish on every single stock in the game. And of course, there are many stocks that we have been covering and will continue to cover that I'm very excited about, and I do definitely see green potential for. Okay, so I just wanted to make that clear, you guys. There's still a bull in me, but when it comes to the greater equity markets, again, with all just the macro fundamentals at play, I can't not believe that the equity indices, once again, keep saying this, but I will, because they're so overextended. The S&P 500 and the NASDAQ will likely see a correction over the summer months, okay? So, as always, we'll go over each topic we're going to be discussing. That was a solid intro. We'll go over each topic we're going to be discussing, and then we'll dive into each one individually. In front of us, Trading View, where we will talk price action, price targets, and good old technical analysis on the following names today, in this order, going down the watch list. Right now, we have the S&P in front of us, just because I kind of wanted to preface the intro with some of my general thoughts on the S&P, tease you guys a little bit, let you guys know what I'm expecting as we dive into the indices. But we have to kick it off with the DXY, the DXY, the good old US dollar. So the DXY is the US dollar weighted against a basket of other international fiat currencies. It basically weighs the strength of the US dollar, all right? And DXY, as you guys can see here. So today, another important thing that I just want to clarify right off the bat, I'm sure you guys would realize this over time, but we are going to stick solely to daily candles. Many of the charts we're going to be looking at today, these aren't crazy volatile stocks. These aren't a lot of the stocks that we look at a lot of the time, but therefore, they move significantly, not slower, but definitely they're not as volatile as a lot of charts that I'll do 4-hour or 1-hour candles on. Okay, so again, sticking to the true macro analysis, we are going to stay on the daily candles here and really focus on the more medium to slightly longer term time horizon, again, as we close out the month of June, maybe heading into July, all right? So we got to kick it off with DXY. The reason for that, and the reason that I do want to, after we cover VIXY, is touch on this, okay? Touch on this article right after we cover DXY on the charts, all right? DXY is the US dollar. And everything in the market that trades against the US dollar has a hard time performing well when the US dollar is going up, because the demand for the dollar is up, the demand for everything that trades against it will likely be down. Now, the NASDAQ, the S&P to a certain extent did prove that wrong, but specifically inflation hedges. So like the ones we're going to cover at the end, gold, silver, precious metals, primarily Bitcoin, my favorite inflation hedge of them all, what I believe is the single best inflation hedge on the planet, are seeing a tough time. Silver and gold, these charts just recycled about an hour and a half ago. So silver's popping right now, gold's right below this. We're not going to cover gold today. Gold's up a little bit, but over the past 24 hours, like 48 hours, silver and gold have gotten clobbered. Bitcoin does not look good, and you guys will understand why that is. Bitcoin broke some pretty crucial support, and again, we'll take a look at the chart as we close out the video. But again, when the dollar is going up, everything that trades against it, for the most part, obviously exceptions, will usually go down. Primarily commodities, inflation hedges, precious metals, Bitcoin, and commodity like copper, platinum, all the good stuff. Even corn and lumber are really taking a tumble right now, okay? So we're not going to touch on those. We are primarily focusing on the equity indices, but we have to kick it off with the dollar because the core of macro is pretty much the dollar, okay? So we're going to cover the dollar, give you guys more of my fundamental spiels there. Move on to the S&P 500 or the SPX. That's the chart that was in front of us as we went through the intro to the video, as we still are. But we'll go into the S&P 500. We will then talk the VIX, which is a CBOE volatility index. This is a direct hedge to the S&P 500. It's inversely correlated, which means that if the S&P 500 goes down, which I think it will, the VIX goes up. And there are certain ways that I personally, right now, I'm pretty heavily weighted on hedges. Many of you guys who are part of the portfolio newsletter Discord, you guys know that. Because, again, I do foresee some volatility in the future. And when the S&P 500 specifically depreciates in value, the VIX will appreciate. Today is a good example of a day where they were actually both red. But that's because the S&P was like barely ended the day down. It's kind of bouncing flat on the day, okay? So the volatility index does track volatility, but when the S&P starts going down and continues its move down, that's when the dragon, that is VIX, VIXY, the ETFs you can play for the VIX, really wake up and really have a lot of potential. So I'm excited to talk to you guys about the VIX, talk to you guys about hedges a little bit. We will then move on to the triple Qs or the NASDAQ. So NASDAQ and tech really outperformed the remainder of the market today. So Dixie going up and the NASDAQ going up does make sense in a sense because a lot of the companies in the NASDAQ are tech weighted. Commodities are like the opposite of the tech sector, which is a very revolutionary sector. A lot of these are American companies, so obviously the dollar going up is good for American companies as opposed to many international companies. These are just things that are important in my mind to keep in mind, okay? Or at least how I rationalize the Dixie going up on top of the NASDAQ. But again, Dixie going up is just a red flag in itself for, once again, everything that trades against the dollar. So NASDAQ also just looks like it wants to correct on top of the S&P. And then after the equity indices, after all the equity talk, we will close it out with, once again, my personal two favorite inflation hedges that unfortunately are just getting beat up right now and are not looking good at all on the short term or medium term time horizon, in my eyes at least. Bitcoin, again, you guys, Bitcoin, I can't make the point clear enough as to how bullish I am on Bitcoin still over the long haul. But I do still think Bitcoin has more downside ahead. That's just the game. I've been here before. I've been here multiple times. I know how this goes. And I don't want to say I know how it goes, but I've seen it happen before. I've been on the wrong side of it. And I'm just doing my best to show you guys what I'm seeing on the tape, what I'm seeing on the charts, okay? So we'll close it out with Bitcoin and silver, the shiny stuff, silver. Silver also looking rough. It is bouncing right now over the past hour and a half, literally. But overall, silver also looking pretty bad in the wake of the dollar's strength, all right? So those are all the names we're going to be looking at on the charts today. You guys, I loved it. I'm sorry that intro is so long, and it still is going to be a little long. But I love talking about this. You guys know it's important. I love covering individual stocks. It's super fun. It's fun seeing stocks rip. But if you want longevity in this game, if you want to play this game for a long time, if you don't want to just be one of the guys who's in and out of the markets, these are the kinds of things that are very important to understand. You have to understand how the entirety of the ecosystem works, because all the little bits and pieces, all the plays like ALY, Riot, Mar, all those exciting plays that we see go up 50, 60% in a single day, that plays a small part. That's a small screw in the massive clock, in the massive, I don't know what analogy to use here, in the massive ecosystem that is the greater financial market. So it's very important to know what's going on in the ether from a bird's eye view to optimize your performance once you get into the smaller stuff, okay? At least that's kind of my take on it. All right, so again, the one article we have to cover today, the one primary fundamental catalyst that has led to some of the volatility we've seen in the markets already this week, and definitely in commodities, and led to the dollar's strength, is this. So the Fed had their meeting on Wednesday. The Fed takes first steps towards tightening tightening policy without setting off a major market panic. So we will read over this, you guys, before diving into the charts at all. You know what? We will just kick it off with reading over this and then just go straight into the charts and spend the rest of the video on the charts. So before we do all that, I will, as always, ask you guys to please give the video a like if you do want to gain value from it today. Let me know, please, if you guys like these macro analyses. Once again, I really like I love making these videos because I do truly feel they're important. So I do hope you guys can take something away from this. I do hope it brings you value. Please let me know in the comments down below whether you like these macro analyses or just hate them and do not think they're relevant. But always rationalize why, so I'll talk to you guys in the comments downstairs about that. And once again, like the video, it means a lot. Subscribe to the channel if you're new around here, want to catch more content like this. Again, you guys, there's ups, there's downs. It's important to cover every aspect of the game because that's how the game goes. Everything works in cycles just like life, okay? So subscribe to the channel if you want to be part of the cycles. Join the Waves fam. And of course, last but not least, check out the Complete Portfolio Daily Newsletter. Obviously, my Complete Portfolio Daily Newsletter. Complete breakdown of my entire portfolio, call options, put options, stock positions, cryptocurrency positions. I do update that every single trading day during market hours, and along with every update, I also send out an email newsletter explaining my trades, rationalizing my thoughts to you guys, throwing some charts in there, throwing some real-time price targets in there for you guys, letting you guys know why I'm trading the way I'm trading. So not so you can copy me. Trust me, you don't want to copy me sometimes, but so you can learn from my success, learn from my mistakes, and hopefully implement some of the pieces of my trading style to yours if you feel like they work for you personally, okay? So check that out, 15 bucks a month, first link down in the description. Also, I said this in a previous video, but I wanna reiterate it. The Sunday Stock Watch videos are now solely going to be for the newsletter and portfolio subscribers. All right, so Sunday Stock Watch, we had a great run, and of course they'll still be here, but once again, that is going to now be a private link that I will only be sending to the portfolio and newsletter group, the Real Waves fam, because I appreciate you guys, and I always want to do my best to give that second tier, give the second, third tier, whatever you consider yourself, of subscribers, a little extra content and a little extra bang for the buck. Okay, so again, just wanted to make that clear. Just shout that out. If you guys are gonna be surprised I don't want you guys to be surprised on Sunday when there's not a Sunday Stock Watch, because there is one. It's just for the portfolio newsletter. Okay. All that said, that was probably the longest intro ever, and this is just going to be a chill, like we are coasting this video. So let us read through this article, just set the fundamental base layer for the technical arguments, and then we will dive into the charts and just spend some time kicking it on the charts, okay? So key points. Fed officials surprised markets after their two-day meeting with a forecast for 2 rate hikes in 2023. So I think it's by 2023, after previously predicting none. The Fed also said it discussed tapering its bond program as expected, but it provided no timeline on when it would begin the process. Stocks fell and treasuries sold off as the Fed made its first baby steps towards tightening easy policies it had in place since the pandemic. Okay, let's read a few more here, and I'll just give you guys my cliff note thoughts on all that's going on with this. The Federal Reserve's hawkish tone said stocks lower and bond yields higher, but for now, the central bank has managed to inch closer toward tighter policy without triggering massive market angst. Even so, concerns remain about whether inflation is really just fleeting and whether the central bank can continue to manage the pathway away from its extraordinary policies smoothly. The Fed surprised investors Wednesday by including 2 interest rate hikes in its economic forecast for 2023 after having none in its last forecast in March, but it did not give any time frame on how long it will be before it begins to trim its bond purchases. Quote, "You've got an oil tanker. You've got to turn the wheel way before, and then the ship starts turning well down the way." That's what we saw, said Vincent Reinhart, chief economist at Mellon. Okay, so I do like that analogy, just because the Fed, the Federal Reserve, the market, the real market makers, because they pretty much dictate the U.S. financial system, like the financial markets as a whole. They dictate the U.S. dollar, so therefore they dictate the U.S. financial markets and arguably the global financial markets. Regardless, they have a big, again, they're driving a warship. They're driving an aircraft carrier, and you can't just crank the wheel and expect it to turn, all right? You have to take baby steps. So they did do that. Again, their words were very vague, but their words mean that they recognize that inflation is running too hot. Commodity inflation, in my opinion, is probably over. The way we've seen things just absolutely rip gold, silver, again, like big, like the perp asset inflation, the epitome of why we saw the rally in the stock markets, in Bitcoin, and just pretty much everything except for the dollar, and the dollar's been crashing, is because we've been printing trillions of dollars of them. So it's obviously it's just supply and demand 101. The more dollars we have, the less scarce they are, the more scarce everything else becomes. That is asset inflation. That's commodity inflation. That's inflation in general, okay? So that's economics 101 right there. But the DXY. So all that said, I think I've made most of my fundamental arguments clear to you guys just in that elongated intro. But let's get a little technical here, okay? So the dollar is doing pretty much exactly as I expected it to. I did say this a couple of days ago in the newsletter when I covered the dollar. If the dollar broke out of this strong ascending channel it's been in since May 19th, since my birthday actually, since May 19th, it's been in a very, very strong, very conservative, but very solid ascending channel, okay? It broke out of that a few days ago on June 16th. When it broke out, it really broke out, okay? So that is the micro. Let's zoom out here again because I do want to get macro. That's where we're on the dailies. Macro, there's two things that can happen right now, okay? I'll move these guys here. Boom and boom. So the dollar right now from a macro longer term trend perspective is in a massive megaphone channel, okay? So megaphone, obviously megaphone because it's shaped like that. Ascending channel is perpendicular, and then a megaphone channel looks like a megaphone, okay? So the dollar has now broken out. It has broken this previous high, so it is in a technical reversal right now because it broke this high back here after setting a series of lower highs and lower lows, classic downtrend. It now set a higher high, okay? So it set its first higher high. Now, with the dollar pull back, it's probably going to test previous resistance as new support, TA 101, you guys know the drill there. Maybe come down a little bit, but the dollar is once again now in a technical reversal and likely to, from a technical perspective, to set a series of higher highs and higher lows now that it's reversed. Now the Fed, once again, the fundamental catalyst of the Fed slowing down money printing, starting to raise rates, will gradually increase and bring back the demand for the US dollar, okay? So longer term, what am I expecting? Maybe over the course of the summer, if the dollar really starts to rip, the dollar can rip when it wants to. It fell off an absolute cliff over the past year or so. So maybe we see it rip. This is like once again elongated. Maybe we come to the top here. Maybe at the beginning of August, the dollar does come up to test the top side of resistance on this massive megaphone channel, taking us almost to 98 on the DXY. Lower, like worst case scenario, say things really slow down, say the dollar breaks back down, which I don't think is possible at this point because it's already broken down so far. On top of the Fed's words, I think a breakdown is very likely. I don't think we're going to come down to test the bottom side again of this megaphone channel. It's possible, but my money is on the fact that the dollar will continue to rise. And of course, once again, that does mean that everything, most things, not everything, there's obviously caveats, there's the exceptions. Most things that trade against the dollar, primarily inflation hedges, once again, Bitcoin, gold, silver, commodities, copper, uranium, etc., etc. Maybe not uranium because it's a fuel and like EVs and stuff, but you guys get the point. Commodities primarily will depreciate in value significantly as the dollar reclaims its value that it once had, okay? So just to give you guys kind of a look at what happened last year, this is when the COVID pandemic hit, okay? So this is the dollar before COVID at almost 103. After that, it's gradually fallen off an absolute cliff, okay? So that's important to keep in mind, is where the dollar was prior to the pandemic. And again, although a lot of money has been printed, although I don't think we're going to get back to triple digits anytime super soon, it is possible, and especially with everything going on once again fundamentally, it would not surprise me to see a significant boost in the dollar after this short-term breakout that we just executed, okay? So that's the dollar. Let's move on to the S&P 500, talk some equities, all right? So S&P 500, as you guys can see here, these are the levels I have for the S&P 500. This would be a stretch. So this is kind of worst case scenario. This isn't even a worst case scenario in my mind. Worst case scenario is down here. I'll talk about those guys after kind of a shorter term analysis, okay? So the first thing I want to show you guys here is what happens after the S&P sets new all-time highs. So earlier this week, the S&P 500, NASDAQ today, which we will get into once again, triple Qs set a new all-time high today. Surprise, surprise, makes it that much more overextended. But S&P 500 a couple days ago set a new all-time high. And every time, not every time, but the past few times we've seen the S&P set an all-time high at a pretty unimpressive rate, we have seen a fairly significant pullback. This one being the most notable in early May. Okay, so again, S&P set a new all-time high. The following 3 days we saw a sell-off. So since this all-time high, it's been a couple days, we see 3 consecutive red candles, which is also bearish. Tomorrow being Friday, some of you guys might be watching this. I don't know what futures are doing right now. Last I checked, they were pretty much flat. But considering it's Friday, considering we just got this news that we just covered earlier this week, considering everything just looks overextended, considering the stochastic, the daily Stokes are turning down, stochastic RSI is pointing to the downside, going straight down. There's just a lot of things that lead me to believe S&P has not tested this very, very crucial line of support in a very long time, that I do believe it has to inevitably test at some point right here. It's from the base back here in October of 2020. Touch point here. This is a very, very strong line of resistance or support, on the overall uptrend that it has not tested since March of this year. So it's been a few months already. I do think that at the very, very least, maybe this happens tomorrow, if I'm being completely honest. At the very, very least, we will see a pullback to this region right here. If this line of support is broken, that is going to be the most crucial factor regarding whether or not we see a pretty significant sell-off. So if this line of support is broken around, let's just say 4170. We're going to call it 4170. Then I think it's very likely that we do see this 6%, like 5-6% correction that I've been expecting for a long time. Okay, so from current levels where we're at right now at the time of recording. So I do think it's likely that the S&P, again, with everything going on, I think it's likely the S&P does come down here. It's bounced a little bit. I think it does not inevitably, I want to say inevitably. It does likely end up breaking this line of overall support. Once that's broken, that is a very, very, once again, every trader who's looking at the S&P is looking at this trend line. If that's broken, that will trigger panic. Again, summer months, historically bearish. Technicals look overextended and look like they want to pull back. If this is broken, that would lead me to believe that we will revert to the mean and come over here where we're at just in mid-March. So keep in mind, you guys, just in mid-March, we were just back here. Like, this is like, we're way higher than we were just in mid-March. So it would not surprise me at all to see this 5-6% correction in the S&P just revert to where we were at least in mid-March, revert to the mean of this shorter to medium-term rally, more medium-term rally over a couple months. And I do think we will see like a 5 to 6% correction in the S&P once again. Now, if we break below that, if we really do see a significant correction, I think this one is the most likely. The red is pretty unlikely in my mind, just considering, I mean, there's still so much money in the ether and stuff. Like, it doesn't make sense for things to get that depreciated. I do not think we're going to see a crash. I think we're going to see a pullback. I think corrections are healthy parts of every bull market. I still think we're in an overall bull market, but I do think everything's overheated and we will see a correction. So worst case scenario in the S&P, in my opinion, is going to be a 15% correction, really revert to this mean that we set in September of last year, just less than a year ago. So again, you guys, still, like, seeing how far we've come in the span of a year is insane. So seeing a 15% correction from current levels, we're flattening out. This looks so much, also just that came to mind, this looks so much like Bitcoin did prior to that pullback. I'm tooting my horn straight up with this one. That's probably the best I've ever called a top. Called Bitcoin's top pretty well within the span of a few days prior to that big sell-off. And I do think that it's likely the S&P follows suit to some extent. Definitely not a 50% correction, not like Bitcoin, but S&P 500, NASDAQ, overextended. I do think it's time for a pullback. I do think summer will be the time that it executes that pullback or correction, okay? So S&P 500 falls. What do you do about it? What are ways to hedge your portfolio in the case that the markets do fall? Maybe the entire, like, if the S&P and NASDAQ really do tumble, a lot of the time, pretty much every other stock in the market does as well, just because there's that panic, there's that liquidity crisis. People want dollars, people get scared, they fly to the dollar and usually bail to some extent their long positions, okay? So the VIX, the volatility index, once again, inversely correlated to the S&P 500. S&P goes down, VIX goes up. There are certain ETFs you can play. I personally play VIXY, okay? And I have calls, I have certain things in place. I have a very large stock position in VIXY right now, honestly, okay? So, again, shout out to Portfolio Newsletter. You guys know that I'm heavy on the hedges right now, okay? But VIXY, it makes more sense to just look at the S&P and call downside targets on the S&P as opposed to looking at the VIXY. But I do still think, like, charts, it's all visual psychology, okay? So I do still think charts come into play. So something with VIXY here is you see that every once in a while, VIXY will just see a very, very significant spike. So I'll show you guys, I'll go back here just to show you guys what the VIX did in 2020 when the markets really crashed, when we saw that liquidity crisis. So VIX, actually, before it gapped up, before it popped off, we were exactly at the level we are now in late February of 2020, okay? So when the markets crashed, when we saw that crazy black swan event, VIXY went up 385% from where we're at, like 17, 18 to a high of 85, which is very, 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 very high for VIXY. Do I think that's going to happen again? No. Do I think we can get to 35, 40? Yeah, I definitely think that's possible. But from a technical perspective, I do think that if we do see a pop, it's very likely that VIXY tests the line of resistance on the current downtrend. Beginning October 20, like obviously touch point here, touch points here. I do think it's likely that if we do see a pop, VIXY will come here. And then if VIXY does pop beyond that, that makes me very bullish. I keep calling it VIXY, but this is the VIX. This is just the volatility index. VIXY actually broke out of a pretty significant downtrend today, which is pretty bullish in itself. But regardless, VIX, I do, just looking at this, you guys, I do think it's about time that we see a pop here. And my money, once again, is on the fact that SP will fall and the VIX will go up. VIXY, again, all the hedges you want to play SPX, you want to play shorts, you want to play short ETFs on the SPX, whatever you want to do. But just know there are ways to hedge your portfolio and keep your portfolio safe in the event that the greater market environment, the greater equity markets do decline in value, all right? So let's cover the triple Qs, the NASDAQ, which set a new all-time high today, and I do believe we'll definitely see a red day tomorrow, like just looking at this, okay? So obviously, the NASDAQ is in like an ascending wedge pattern, very long-term ascending wedge pattern, starting way back in February of this year. So again, a lot of volatility here, a lot of new all-time highs, just set a new all-time high today. Just give it up for the NASDAQ. But I do think that, again, we perfectly, if you guys look here, like this is such a macro signal to take some profits, is that we just today tested the line of resistance on this overall very long term, like again, this wedge pattern, this massive wedge pattern, this overall uptrend. We did test the top side. And every time, or like obviously right here, after the last time this line was tested, we saw a very, very significant sell-off, which we saw right here from April 29th to early May. Lasted a couple of weeks. I do think it's likely that we see a similar thing occur right now. Once again, on top of all the fundamentals I've been ranting about and repeating over the course of this entire video, I do think it's likely the NASDAQ sees a correction. We are seeing, I mean, we're seeing a pretty decent amount of volume, but again, just looking at this, guys, it just looks overextended. If the NASDAQ does break out, if we see a green day in the NASDAQ tomorrow, that is actually very bullish. I don't think it's going to happen, but if the NASDAQ breaks out, then we're probably just going to be on our way to new all-time highs. Obviously, it would be a new all-time high if the NASDAQ sees a green day tomorrow, but it would also signal a technical breakout of this ascending wedge pattern, and we'll probably just keep going up, if I'm being completely honest, okay? I just don't think that's very likely. Also, the NASDAQ, you can see here, has the daily Stokes have been just overextended for such a long time. I think it's about time these guys turn to the downside. Again, you guys, everything's just high, everything's overextended, everything's overinflated, and I think it's about time for a correction. So first price target for the NASDAQ, let's say a price range here, and then we'll close it out with good old BTC and silver. I do think we will see at least a 5% correction from current levels in the triple Qs. Worst case scenario for the NASDAQ is going to be to revert to this mean back here. Similar story with the S&P. So don't have that line drawn, but it's easy enough just to immediately spot right there. Initial high prior to the first big pullback we saw in as we were heading into the fall, like in the fall of 2020. That would take us to about $300, which from here, of course, good old price range from current levels from new all-time highs is going to be about a 12% correction, okay? So worst case scenario in my mind for the S&P is about 15% worst case scenario for the NASDAQ, because everything is obviously trending towards tech. And the triple Qs, the NASDAQ is very, very heavily tech weighted, is going to be about 12%. Obviously, it can go lower than that, but that would be, I mean, I think a 12% correction is honestly pretty conservative, okay? So I'm calling by the end of the summer, 12% correction in the triple Qs, all right? So let's close it out with good old Bitcoin and silver. So Bitcoin, unfortunately, breaking a very, Bitcoin is the one asset we're going to look at on the 4 hours, just to show you guys this, because Bitcoin did just break a very, very significant line of support on the current uptrend beginning at on June 8th. So not too long ago, just about a week ago. But again, very, very classic uptrend, clean ascending channel right here. High, series of higher highs, higher lows, high, low, higher, high, higher, low. But did also break a very, very significant line of support here on this uptrend, touch point here, creating that line of support on, once again, the short-term uptrend. Broke below it. It is bouncing a little bit now, but best case scenario at this point, after the trend is broken, you're usually looking at more downside on top of, so there's some negative fundamentals. There's some FUD out there in the air for Bitcoin right now. On top of the fact that it's just been correcting for so long, 4-hour Stokes turning down right now. Dailies probably are as well. Best case scenario is going to be come up, in my opinion, short term, to test the previous line of support as new resistance, maybe 38.7, 38.8 over the coming day or two. Maybe even like 39, come bounce back up over the next couple of days. But I do think it's likely. I still think that Bitcoin, like my overall general thesis since since we started this correction, since we broke support specifically, has been that Bitcoin will revert to the mean, which means that Bitcoin will revisit the first high, the initial high of this rally, which is going to be right around here at about $24,500. My conservative price target for a long time, you guys know this, has been $25,000. Yeah, the daily Stokes are about to curl down. They're pretty high right now, and it look like they want to head down. So I still think you guys, again, could not be more bullish on Bitcoin long term. 10 years from now, I know for a fact almost Bitcoin will be higher than it is now. But that's just how bubbles play out. We've ripped up so much that now that we're correcting, it's time to revert to the mean. Once again, revisit that initial high. You could actually say 20K is that initial high that we really saw before we really broke out of the previous 2017 high and saw it rip up again. So 20K is going to be worst case scenario, but I'm personally very, very comfortable buying Bitcoin at 25K, and I'm personally confident that we're going to see it at some point over the coming months. All right, so close it out with silver. Poor silver just falling off an absolute cliff over the past couple of days. Yeah, you guys, this doesn't look good. So silver on the bright side is in a massive wedge pattern. Okay, so silver is in a pretty, this is a pretty clean symmetrical wedge, if I'm being honest. Okay, that's been spanning for, the better part of half a year, over half a year now. All right, so silver in a massive wedge pattern right now. I do think it's pretty much inevitable at this point, just looking at this, that we do test the bottom side of this around $25. So although silver again is bouncing a little bit now, I do think it's more likely than not that silver will. You can also see kind of a head and shoulders playing out right here. So left shoulder, head, probably going to go sideways a little bit and come down, resolve that head and shoulders pattern. So worst case scenario is silver comes down. I shouldn't say worst case scenario. I think a very likely scenario is that silver comes down to about $25, like 25.20. If that's broken, then we'll probably resolve the head and shoulders pattern at the base here in March of this year, which is not even going to be surprising at all, which would take silver down to about 23.85. And if the dollar continues to appreciate in value, the silver it would not surprise me, honestly, if silver came all the way back down here and kind of went back to where we were just even before the COVID crisis, like even before the pandemic. Now, keep in mind, you guys, silver is still, in my mind, I like silver. I like silver way more than gold. I think silver is still undervalued. I think silver has way more potential than gold. But again, you guys, if the dollar keeps going up, although there's still way more dollars in circulation than there was in early 2020, even before the COVID crisis, honestly, silver can still go down because the capital is just going to fly into other things that look more appealing. Okay, so am I bearish on silver? Short term, yes. Medium term to long term, I don't know. I have to see how this wedge pattern plays, or not this wedge, this triangle pattern plays out. But we'll have to see there, you guys. You guys know you guys know I've been bullish on silver many times in the past. You guys know I like silver fundamentally. Once again, silver, the above ground supply, is way more scarce than gold. Silver is like relatively more scarce than gold. Okay, so I do like silver. Silver smaller. Silver is like the Ethereum to the Bitcoin. Like there's way more upside potential with silver. I do still think silver could have potential, but it's very dependent on what the dollar does and what the greater equity markets do. Okay, so the thing about silver and gold too as well is that if the equity markets do pull back, if tech pulls back, if all that stuff does pull back, that capital will want to find a safe haven in another commodity class. It's not just going to go back to dollars. At least it's not likely that it goes back to dollars unless the dollar is absolutely ripping. So silver and gold can act as hedges to equities in the case that we do see equities pull back. So there is the silver lining for precious metals like silver and gold. And I'm probably gonna make a video on gold and silver next week. Get a sponsored video. You guys know the drill there. But I will cover both gold and silver in next week Friday's video, and I'll let you guys know. We'll do a little update on precious metals next Friday. All right. So all that said, if you're still around, I'm genuinely impressed, and I'm honestly surprised because this was a long one. But I appreciate you watching. I really, at this point, you can talk to me in the comments about whatever you want. Throw 100 emoji down below so I know you made it all the way through the video, and I'll definitely respond to your comment. But I appreciate you guys watching. I appreciate you tuning in. Please give me your thoughts on the macro environment. Let me know if you think it's important once again, and let me know which sector as well you're bullish on. Let me know which sector, if the equity markets do see a pullback, could withstand the storm of the equity indices and outperform the entirety of the markets. All right, so we'll call it there, you guys. Catch you guys downstairs in the comments. And until next time, always remember, take action, make waves. Peace.